Welcome back to Talk Tickers, where we, break down these earnings calls.
Yeah.
So you don't have to.
That's right.
And today, we're going to be taking a deep dive into Home Depot's
Oh, yeah. Home Depot.
Q3 2024 performance.
Absolutely.
We've got the transcript. We've got some analysis on their competitors.
Yep.
And we've even got some whispers about some trade ideas.
Oh, nice.
So,
I love it when we get into the trade ideas.
Yeah. So what really went down this quarter?
Yeah.
What does it mean for Home Depot's future?
Mm-hmm.
And did those Halloween decorations really fly off the shelves?
Well, you know what's fascinating about this one is that it's not just about the numbers.
Okay.
This gives us a glimpse into Home Depot's strategy in this kind of tricky economic climate.
Right, because everybody's talking about inflation and interest rates and how does a giant like Home Depot adapt?
Exactly.
So let's start with their overall performance.
Okay.
They beat expectations. But those hurricane sales really kind of muddied the waters a bit.
They did a 6% sales increase.
Which sounds great.
Yeah, that sounds fantastic.
Yeah.
But then when you look at the comparable sales, the comps, the stores that have been open at least a year, those were actually down 1.3%.
Okay.
So that gives us a little bit of a clearer picture of the underlying business separate from new store openings.
New store openings, got it. Okay.
Yeah.
So Helene and Milton, those hurricanes?
Yes, those were big ones.
They definitely threw a wrench in things.
For sure.
And we're talking up to like $200 million in extra sales.
Yeah, at least.
Just from those two storms.
Yeah. And that boosted their October comps by 120 basis points.
Wow.
Which, just to clarify, a basis point is 1/100%.
Okay.
So we're talking a significant jump there.
Got it. So hurricanes equal more people rushing out to buy plywood and generators.
Absolutely. Emergency supplies, all that stuff.
So how do we untangle that impact?
Yeah.
From how the business is really doing?
Well, that is the challenge, right? Separating the hurricane effect from the core trends.
Right.
It's tricky, but it's really crucial for understanding the long-term health of the business.
Yeah.
What we can say is that even excluding those hurricane sales, Home Depot still beat analysts' predictions for the quarter.
Interesting. So maybe they're not as reliant on hurricane season as we might have thought.
Precisely. And you know what? There's another weather-related thing to think about here.
Okay.
All that sunshine we had in Q3.
Oh, yeah. It was beautiful.
That probably boosted sales, too, especially for your outdoor projects, gardening, all that.
So good weather helps their bottom line.
Yeah.
But makes it harder to forecast what's coming next.
It does. It makes it harder to see those true underlying trends.
That's ironic.
It is a little bit, yeah. And this brings us to a point that has analysts a little bit concerned.
Okay.
We're talking about the big ticket blues.
Big ticket blues.
As some are calling it, purchases over $1,000 took a hit, down 6-8%.
Yeah, that's not a small dip.
No, it's not.
So is this a sign that Home Depot is losing its mojo?
Not necessarily. To understand this, we need to consider the bigger picture.
Okay.
Think about it when interest rates are high.
Yeah.
It directly affects things like home equity lines of credit or HELOCs and mortgages.
Those are the loans that people use for big renovations, right?
Exactly. So when those rates climb, as they have been, people get a little hesitant to take on those big projects.
Right. It makes you think twice about gutting your kitchen.
Yeah.
When you got those high interest payments looming.
I've been putting off some renovations myself, to be honest.
Oh, really?
Yeah, with these interest rates.
Makes sense. But here's where things get interesting.
Okay.
While DIY spending might be slowing Home Depot's pro sales, meaning sales to contractors, are actually outpacing DIY.
Interesting.
Especially among those using their pro ecosystem.
Oh, yeah, that pro ecosystem.
Yeah. So what is that?
This is key. This suggests that Home Depot is really strategically positioning itself to weather the storm, so to speak.
Okay.
By focusing on the pros, they're tapping into a customer base that's less likely to be swayed by these economic ups and downs.
Yeah, because those bathroom remodels aren't going to renovate themselves.
That's right.
Recession or not.
Exactly.
So tell me about this pro ecosystem.
Sure. So it's a suite of tools and services tailored to professional contractors.
Okay.
Think dedicated sales support, bulk discounts, even job site delivery.
Wow.
Basically everything a pro needs to run their business smoothly.
So it's not just about selling tools, it's about becoming a partner in these pros' success.
Precisely. And this strategy seems to be paying off. It speaks to a broader trend that we're seeing in retail, building loyalty by going beyond transactions, creating a valuable ecosystem for your customer base.
Yeah, that loyalty can be a powerful asset, especially in a shaky economy.
Absolutely.
Well, we can't talk about retail without addressing the elephant in the room. Shrinkage.
Yeah, you're talking about theft and losses, which have been plaguing the entire industry.
Yeah.
But here's the surprise. Home Depot's actually making significant headway against shrink.
What?
Multiple quarters of improvement.
That's huge because shrinkage eats into profit margins like crazy.
It does. It does. It's a big problem.
So what's their secret weapon?
Well, they haven't divulged all the details, but it seems to be a multi-pronged approach, investing in technology like better security cameras, inventory tracking systems, improving in-store security measures, even collaborating with law enforcement.
So they're throwing everything but the kitchen sink at this.
Yeah, it seems to be working, and this is definitely something to watch as other retailers might try to emulate their success.
That's true, okay.
Now, speaking of smart moves...
Okay.
Remember that SRS acquisition?
Right, the specialty trade supplier.
That's right. That was a big deal, and it's already exceeding expectations. They brought in $9 billion this quarter alone from SRS.
Wow.
And they're projected to hit $6.4 billion for the year.
That's impressive.
Those are some impressive numbers. What's particularly interesting here is the synergy that we're seeing. SRS gives them access to a whole new customer base.
Right.
Those specialty trade professionals like your roofers, your plumbers, your landscapers.
And they're already leveraging this, right? Because I've seen some SRS products popping up in Home Depot stores and vice versa.
Exactly. It's a two-way street, opening up new revenue streams and cross-selling opportunities. This is a textbook example of how strategic acquisitions can unlock significant growth.
It's like 1 + 1 = 3.
Yeah, exactly.
Now let's talk about something that has everyone a bit on edge.
Okay.
Those tariffs on Chinese goods.
Yes. The looming tariffs, if those actually kick in, could have a significant impact on the entire retail landscape.
Yeah, we're talking potential price increases, supply chain disruptions, the whole 9 yards.
Yeah, the whole shebang.
So what does this mean for Home Depot specifically?
Well, the potential impact is twofold. First, there's the direct cost of the tariffs themselves, which could eat into profit margins.
And those costs get passed down to the consumer one way or another.
Exactly. But then there's also the broader impact of inflation.
Right.
If tariffs push prices up across the board, it could squeeze consumer spending even further, impacting sales across all categories.
It's a domino effect that no one wants to see.
No, it's not good.
But you mentioned earlier that Home Depot might be better positioned than some to weather this storm.
They do. They have a few things working in their favor.
Like what?
For one, they have massive scale and bargaining power that gives them leverage when negotiating with suppliers, potentially mitigating some of the tariff impact.
So it's like they're a giant ship navigating choppy waters.
Right.
Whereas smaller retailers are in more vulnerable boats.
Precisely. And secondly, they've been through this before.
Yeah.
Remember those tariffs from a few years back?
Right.
Home Depot successfully navigated those, so they have valuable experience on their side.
So experience plus scale equals
a fighting chance. They're not immune to the impact,
right?
But they're better equipped than some to handle the challenges these tariffs might bring.
Okay, well, that's a bit of a relief.
Oh,
now let's look ahead.
Okay.
No one has a crystal ball.
No.
But what are some of the key questions
that
analysts are asking about 2025 and beyond for Home Depot?
Well, the big ones are, will those big ticket purchases rebound?
Okay.
Will their pro focus continue to pay off? And perhaps most importantly, will interest rates finally start to come down?
Those are the million-dollar questions.
Those are the big ones.
So after dissecting all this, what's your overall take on Home Depot's prospects?
I'd say I'm cautiously optimistic. They're a well-run company with a proven track record. They're making strategic moves to adapt to the changing landscape, but those macroeconomic factors are still big unknowns.
Agreed. It sounds like they're weathering the storm pretty well.
Yeah.
But there are still choppy waters ahead. Now, this wouldn't be Talk Tickers
What?
without our This Is Not Financial Advice segment.
Always a fan favorite.
So hit me with your most outrageous but plausible trade idea.
All right, here we go.
Okay.
Short at Home Group, Inc.
Okay.
They had a rough quarter and issued a warning suggesting they're particularly vulnerable in this environment.
Okay.
Then go long on Home Depot.
Okay.
It's a bet that Home Depot's strategic advantages, especially their focus on pro customers, will win out in the long run.
Wow, that's a bold move, Essentially betting on the bigger fish to outswim the smaller one in these choppy waters.
That's right.
I like it.
Of course, remember this is purely hypothetical.
Of course.
And for entertainment purposes only.
Right.
Do your own research and consult a professional before making any investment decisions.
Always sound advice. All right, that wraps up part 1 of our deep dive into Home Depot's Q3 earnings call. We'll be back with part 2, where we'll distill some key takeaways and discuss what this all means for you, the investor and consumer. Stay tuned.
Welcome back to Talk Tickers. We're continuing our deep dive into Home Depot's Q3 earnings call, going beyond the headlines.
Yeah, we've covered a lot of ground.
We have.
Hurricanes, tariffs, that bold, short, at-home, long Home Depot trade idea.
Oh, yeah.
Now, let's step back and distill some key takeaways.
Okay.
For investors, and just as importantly, everyday consumers.
Right. For the folks at home.
So first and foremost, it seems like Home Depot is demonstrating resilience.
They are.
In the face of some pretty significant challenges.
Yeah. We're talking persistent inflation, rising interest rates.
Right.
A general economic mood that's, shall we say, a bit uncertain.
Uncertain, yeah.
Yeah.
But they're navigating this tricky landscape.
They are.
Better than many analysts anticipated.
Yeah. And one key factor is their strategic focus on the pro customer.
Right. Catering to those professional contractors.
Yeah.
Seems to be a smart move in this environment.
Absolutely. By targeting pros, Home Depot is tapping into a revenue stream that's less sensitive to economic fluctuations.
Makes sense.
These are folks who have ongoing projects, renovations that need to get done.
Right.
Regardless of whether the stock market is up or down.
It's like they're building a fortress brick by brick.
I like that.
To withstand whatever economic storms might come their way.
A good analogy, and their investments in technology and supply chain management are also paying off, particularly when it comes to combating shrinkage.
Yeah, shrinkage is a silent profit killer for retailers.
It is.
So it's encouraging to see Home Depot making tangible progress there.
Absolutely. It's a testament to their focus on operational efficiency, and we can't forget about that SRS acquisition.
Oh, yeah?
It's proving to be a game changer, both in terms of revenue generation and expanding their reach into new customer segments.
So it's like they've added a whole new wing
to
their castle, bringing in those specialty trade professionals, the plumbers, electricians, roofers, all under one roof.
Precisely. They're broadening their horizons and creating a more diversified business.
So Home Depot is looking strong. But what about the bigger picture? What does all this mean for the home improvement market in general?
Well, the market is undeniably facing headwinds. High interest rates make it harder for people to finance those large-scale projects.
Right.
Economic uncertainty makes people more cautious, maybe delaying that dream kitchen renovation.
It's like hitting the pause button on those big aspirations.
Yeah.
But the underlying demand is still there, right?
It is.
People still need to maintain and improve their homes.
Absolutely. Pipes still leak, roofs need replacing, and people still aspire to those beautiful upgraded bathrooms.
And as we've seen with Home Depot, there are companies out there adapting, finding ways to thrive even in this climate.
That's right.
So it's not all doom and gloom.
Yep.
There are still opportunities out there.
There are.
Both for investors and for those looking to improve their homes.
Exactly. But there are a few things to watch closely in the coming months. Things that will determine whether the home improvement market takes off or stays grounded.
So what should people be keeping an eye on?
First, interest rates are key if they start to come down. That could be a major catalyst for the market, unleashing a flood of pent-up demand for those big projects that have been put on hold.
Like a dam breaking, with everyone rushing to finally get that new kitchen or bathroom they've been dreaming of.
Exactly. What else should we be watching?
Yeah, what else?
Consumer confidence. If people feel more secure about their jobs and the overall economy, they'll be more willing to invest in their homes.
It's all about that feeling of stability and optimism.
Right.
Feeling confident enough to take the plunge on a major renovation.
Exactly. And finally, keep an eye on innovation. Companies like Home Depot are constantly developing new products and services that make home improvement easier and more affordable.
It's not just about weathering the storm. It's about finding new and innovative ways to thrive within it.
Precisely. And that's what makes this industry so dynamic and exciting.
Now, I can't let you go without circling back to your bold trade idea.
Oh, here we go.
Short, at-home group, long Home Depot. Still feeling good about that one.
Remember, this is not financial advice.
Of course.
But yes, I still think it's an intriguing play. At Home Group seems to be struggling in this environment, while Home Depot is showing strength and resilience.
A classic David and Goliath scenario, except in this case, you're betting on Goliath.
Well, maybe not quite Goliath, more like a well-prepared and experienced contender in a tough fight. but it highlights the importance of looking beyond the headlines and digging deeper into a company's fundamentals.
Well said. Now, as we wrap up this part of our deep dive, what's the one big takeaway message you want listeners to walk away with?
The home improvement market is facing some challenges, but it's far from defeated. Companies like Home Depot are proving that it's possible to adapt and even thrive in this environment.
And what does that mean for everyday investors and homeowners?
It means there are opportunities out there, both for those looking to grow their investments and those looking to improve their homes. It's all about staying informed, doing your research, and making strategic decisions.
Great advice. And that wraps up part 2 of our deep dives. Stay tuned for part 3, where we'll take your questions and offer some final thoughts on the future of Home Depot and the home improvement industry. Welcome back at Talk Tickers. It's the final stretch of our deep dive into Home Depot's Q3 earnings call.
We've crunched the numbers, we've analyzed the trends, and even dared to throw out a wild trade idea or two.
And now it's time to answer the question that's probably on everyone's mind.
Yeah.
What does this all mean for me?
Right.
Whether you're an investor eyeing Home Depot stock or a homeowner thinking about that long-awaited renovation, there are definitely some valuable takeaways here.
Absolutely. Let's start with the investors out there. First and foremost, it's crucial to understand that Home Depot is a long-term play. This isn't a stock you buy expecting it to skyrocket overnight.
Right. It's more about steady, consistent growth.
Exactly. Home Depot has a history of solid performance and a strong track record of paying dividends, making it appealing to investors who prioritize stability and income.
Right.
But of course, no investment is without risk.
So what are some of the potential red flags investors should keep in mind when considering Home Depot?
Well, as we've discussed, the macroeconomic environment is a major factor. If high interest rates and economic uncertainty persist, they could continue to weigh on the home improvement market as a whole, and that could impact Home Depot's performance even with their strategic advantages.
It's like that dark cloud hanging over the entire industry.
Yeah, exactly. What else should investors be watching out for?
Yeah.
Competition. Competition is always a factor. Home Depot operates in a competitive landscape, both online and in brick-and-mortar stores. They can't afford to rest on their laurels. They need to keep innovating and finding ways to stay ahead of the curve to maintain their market share.
So for investors, it's a mix of cautious optimism, keeping a close eye on those broader economic trends, and monitoring how well Home Depot adapts to the competitive landscape. Now let's shift gears and talk to the homeowners listening in. What does this earnings call mean for them?
The good news is, Home Depot remains a fantastic resource for homeowners of all levels, from seasoned DIYers to those who prefer calling in the pros. They have a vast selection from basic tools to high-end appliances.
And as we discussed, their pre-services can be a real lifesaver for those larger, more complex projects. Sometimes it's just best to leave it to the experts.
Definitely. But with all that said, the key thing homeowners need to be mindful of right now is their budget. With interest rates as high as they are, it's crucial to plan carefully and avoid overextending yourself financially.
It's easy to get caught up in the excitement of a dream renovation.
It is.
But that financial hangover can last a lot longer than the thrill of new countertops.
Exactly. It's always better to err on the side of caution, especially in these uncertain economic times. Make sure you have a solid plan and are comfortable with the financial commitment before taking on any major home improvement project.
Now, before we wrap up, I have to indulge myself and bring up that bold trade idea one more time.
Oh, okay.
Short at-home group, long Home Depot. Any final words of wisdom on that?
Remember, this is purely hypothetical and absolutely not financial advice. But as a thought experiment, it does reflect those contrasting dynamics we're seeing in the home improvement market. At-home group appears vulnerable, while Home Depot is demonstrating resilience and strategic strength.
It's like you're saying, don't bet against the company that's building a fortresses.
Something like that. But ultimately, any investment decision should be based on thorough research and careful consideration of your own individual financial circumstances.
Couldn't agree more. Well, folks, that brings our deep dive into Home Depot's Q3 earnings call to a close.
We hope you found it insightful.
Remember, knowledge is power, especially in the world of investing. So keep diving deep, keep asking those critical questions, and join us again next week for another earnings call breakdown.
Thanks for listening to Talk Tickers.